Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane, and this week we're covering the new beneficial ownership reporting requirement that will affect a large number of entities. We'll be covering this issue along with how to avoid the associated penalties at our upcoming post-tax season update and review webinars. You can see a list of available dates and times and get registered at spiedel.com under webinars. The Corporate Transparency Act of 2019 includes a reporting mandate that's going to affect millions of entities starting in 2024. Under this new law, corporations, limited liability companies, limited partnerships, and other entities that file formation papers with a state's Secretary of State office or similar government agency will be required to file a report with the U.S. Treasury Department's Financial Crimes Enforcement Network, or FinCEN. In some states, this might even include a sole proprietorship with a DBA. The purpose of this report is to prevent money laundering by gathering information on the entity's beneficial owners. The law is effective starting January 1st, 2024, so a domestic entity formed or foreign entity registered after 2023 will have to file the report within 30 calendar days of the earlier of the date on which it receives actual notice that it is registered to do business, or the Secretary of State or similar office provides public notice that the reporting company is registered to do business. For entities that were already in existence prior to January 1st, 2024, the initial report doesn't need to be filed until January 1st, 2025. The report will be filed electronically through a secure system available through FinCEN's website, similar to the FBAR. This system is not yet operational, but it will be available before the report filing deadlines begin. The willful failure to report information and timely update any changed information can result in fines of up to $500 per day, or if criminal charges are brought, fines of up to $10,000 and/or imprisonment. These penalties can be imposed against the beneficial owner and/or against the entity. The vast majority of small and medium-sized businesses that form with the Secretary of State's office will have to comply with these new requirements. FinCEN estimates that there are over 32 million existing entities that will have to comply, and going forward, close to 5 million new entities will be required to file reports each year. The reporting rules do not currently apply to general partnerships, most trusts, tax-exempt entities, and other businesses that are already highly regulated, such as public accounting firms, securities dealers, insurance companies, etc. Large operating companies are also exempt, which are defined as businesses with 20 full-time U.S. employees and at least $5 million in gross receipts reported on their prior year federal income tax return. There are a total of 23 exemptions contained in the governing regulations. Beneficial owners are broadly defined and involve owners who directly or indirectly own more than 25% of the entity's ownership interests or exercise substantial control over the reporting company, even if they don't actually have an ownership interest. But this can encompass senior officers of the business and anyone involved in significant business decisions, for example, board members. Types of information that must be provided and kept current for these beneficial owners include the owner's legal name, residential address, date of birth, and unique identifier number from a non-expired passport, driver's license, or state identification card. The entity will also have to provide an image of any of these forms of documentation to FinCEN for all beneficial owners, and will have to provide updated copies when a passport or driver's license is renewed. If any of this information changes, like in the event of a marriage or a divorce, or if a beneficial ownership interest is sold or transferred, the entity will have to report this information within 30 days of the change or face the potential of having the penalties imposed. While the beneficial ownership information may not be difficult to obtain for very small business entities, it may be more difficult and time-consuming for tiered entities or entities with boards of directors and numerous related owners or senior officers. Spiedel's Federal Tax Letter provides a monthly update of tax news and analysis, plus a searchable online archive of back issues that keeps you informed about the issues that will impact your clients. You can see details on this publication and subscribe at spiedel.com under Publications. That's all for this week. Join us next time for another episode of Spiedel's Federal Tax Minute.